Morning. Today is Monday, July 31st. I hope this finds you well. 3 weeks from tomorrow is our annual Capital Cruise Client Appreciation Dinner event. If you are a client of Capital Consulting Group, whether you work with Dan, Rana, or myself, consider this your personal invitation to join us for a wonderful evening on Lake Minnetonka. This year, we are on one of Alan Elma's newer yachts, the Arabella. Alan Elma's never disappoints. So again, we hope to see you on board. You can get all the details and RSVP on the events page of our website. Again, that web address is www.investwithccg.com. Life is too short to worry about what the next headline could do to your life savings. Hi, my name is Eric Hagan, and I keep my thumb on the pulse of the economy and the markets so my clients can focus on the things that are actually important to them. Thank you for joining me the next few minutes on today's weekly economic video update. A Friday surge pushed stocks solidly into positive territory last week, ignited by cooling in an inflation gauge closely tracked by the Federal Reserve. The Dow Jones Industrials Average advanced 0.66%, while the Standard & Poor's 500 climbed 1.01%. The NASDAQ Composite Index rose 2.02% for the week, and the MSCI EAFE Index, which tracks developed overseas stock markets, gained 0.74%. Stocks were flat for much of last week amid a batch of new earnings, a quarter-point interest rate hike, and strong economic data. After beginning with gains, stocks lost momentum following the Fed's expected rate hike announcement on Wednesday. A bounce on Thursday, sparked by a positive mega-cap tech company earnings, reversed after bond yields increased. Stocks recovered strongly Friday on the release of the Personal Consumption Expenditures Price Index, which fell to its lowest level in 2 years. Much of the market action was related to earnings results, with 44% of S&P 500 companies reporting. 78% of them have exceeded Wall Street forecasts. Expectations of a recession were high coming into 2023. Last week may have erased this recession narrative overhang. Second quarter gross domestic product data released last week was one big reason why. Economic activity expanded by 2.4%, which was above the forecast of 2% and represented an acceleration from its first quarter GDP of 2%. Consumer spending was a major driver of that expansion, rising 1.6%. Joining the recession deferred camp this week was Fed Chair Powell, who stated that the Fed was no longer forecasting a recession. As always, we will continue to keep our finger on the pulse of what's really going on in the markets. This week's economic news that we're watching includes tomorrow we have the Institute for Supply Management's Manufacturing Index, as well as the Job Openings and Labor Turnover Survey, or JOLTS report. Wednesday, we have ADP's employment report. Thursday, jobless claims, as well as the Institute for Supply Management's Services Index. And then Friday, a look at the employment situation. As I mentioned, we are quickly approaching the halfway mark for earnings season. So here are a lot of the companies that we're watching this week. I'm not going to read them all, but you see a lot of familiar names up there. So we got a busy week watching earnings as these are all coming out. And again, if we're not investing your life savings for you, you can learn more about our personalized approach at smartmixportfolios.com. Last week, I hosted our monthly capital markets update and outlook presentation. This is a more in-depth opportunity to hear directly from our Chief Investment Officer, Tom Fox. Tom reviews both the positives and the headwinds in both the economy and the stock market. And again, this is your opportunity to kind of look over our shoulder and get a balanced view of where we think things are headed. And that balanced view is very, very important. This past winter, the doom and gloom drumbeats were so loud, it was deafening. But despite all the noise, Tom's analysis said that things would be much better here in 2023. What you're looking at here is a summary from the monthly report that Tom gave us in December of 2022. He said going into 2023, the theme of the year would be wag the dog, meaning inflation would come down, the Fed would stop raising interest rates, and if we had a recession, it would be a mild one. Generally, that theme is spot on. So he was saying soft landing, soft recession in 2023, no deep recession. Check that box. Corporate earnings would come down, no crisis. We have not seen any crisis. Bumpy ride in the first half, high volatility. We did have a lot of high volatility in the first half. High probability of double-digit returns this year. The S&P 500 index is up roughly 20% year to date. His S&P 500 forecast, 4,600 by year end. We've already hit that. Can check that box. And explosive upside in stocks and bonds around mid-year. If you've been watching, that's exactly what we've been seeing the last couple of months here. So again, Tom has been incredibly correct and accurate. It's July now. Again, we've already hit our year-end target for the stock market, so we've had to make some adjustments. So with that, if you want to know where we think things are going next, the recording from this call from last week is now available on our website. And as you're watching, I've included a button to ask a question. We would love to answer any questions that you have. So feel free to use that ask a question button and we will get back to you at our very first opportunity. And then I've also included a summary for you that you can download a summary from that call, the positives, the headwinds, and the outlook for where we think things are going. All right, that is it for today. Thank you for staying until the end. I do have another riddle for you. Be the first person to post the correct answer down below this video in the comments section, and we'll send you a gift card for coffee on us. All right, today's riddle is, this word signifies a gap between hills or mountain ranges, yet remove just one letter and it signifies a gap between buildings. What is this 6-letter word? Again, be the first person to post the correct answer down below this video in the comments section, and we will send you a gift card for coffee on us. If you would like the answers to previous week's riddles, you can go to our website /riddles to get those. Lastly, later on today, I will be sending out our full economic update for the week. This update includes more than what I talked about here this morning, including our popular weekly tax tip. So if you'd like to get this email and you're not getting it, you may subscribe at our website, www.investwithccg.com. Hey, this is Eric again. That's it for today. Don't forget to subscribe before you leave. Here at Capital Consulting Group, we provide personal wealth planning and fiduciary investment management solutions for individuals, couples, and families. To learn how to see your entire financial situation, both today as well as every year into the future, go to clearfinancialfuture.com and watch the short 2-minute video. To learn how we give our clients' life savings the attention it deserves and to see how we're doing, visit smartmixportfolios.com. And lastly, if you'd like help investing your 401k at work, visit me over at 401kinvestmentpros.com. Thank you again for your time today. I'll look for you next week.